Hi traders, welcome back to another trade recap video. It's been a while since I upload any trade recap because the market for the recent 2 weeks has been relatively slow, and I've not been taking a lot of trades as well, significantly reduced my size. So let's move to the chart, and that's the position on pound Aussie that I took that made me over 24,000 at the same time 7.44 R. So let's just hide everything and let's put on a replay mode. All right. So if we go to the 4-hour chart, why did I decide to go long on pound Aussie? And the entire thesis actually started on 21st of February, or I'll say the entire second and third week on February. And that's exactly a setup that I call in my private community as well. If you're interested, link in the description. You can always join my sort of an educational platform where I coach my students every single day. How can they attack the market, etc., etc. So go back to the chart, 4-hour time frame. When we saw that, that's what I call a build up. When price starts accumulating or building up around that 173 or 174 area, we pretty much anticipated a break towards the upside. But let me tell you, why did I not enter right there? So if I entered right there, it would have been a much more significant move, right? I didn't enter. That's because for me that's still a little bit aggressive, and I don't like to enter when price was still under this 175.20 zone, because if you switch to the daily, you can clearly see that if price continue to stay under this 175.20 zone, which is right here, it really has potential to continue running lower. So that was one thing that I was trying to avoid. That's why I didn't get involved in any of this long setup. Then when price starts breaking through that 175.20 back to the 4-hour, I was waiting for a pullback into this area. It didn't pull back as well. That's why again I missed out the second buy opportunity. So why did I go long here? It was because, go back to last Friday, back to the 15-minute chart. So I actually noticed that price started to form a falling wedge pattern, and at the same time that falling wedge also aligned with this previous major, or what I call significant support zone. That's what really attracts me into the market. And drop down to the 5-minute chart, I actually had my limit order. I actually set my limit order under that wedge pattern. Can you see we actually form a wedge here? Wedge is something that I like to trade, especially when it comes to reversal or key level retest. I just had my limit order at the bottom band of this wedge pattern, and guess what? Price tapped me in. I nearly got stopped out on this one. If you look at the 15-minute chart, that pin bar almost wicked me out of the position, but after I saw that pin bar, feel a lot more relieved, and guess what? Price continued to run up, then come back for a nice retest, holding above that 177.35. Then we sort of just continue running all the way up. Can you see how we actually come back for a second retest at the 177.35 zone, which is still above that structure, and price sort of just run all the way into my favor. Then my exit was actually not there. It was actually after a pullback back to the 1-hour chart. After I see that pullback into this area, I basically took a scale in position. Let me just check it out. I actually added more size at 178.279, so somewhere around here. So I added another 30% size. If you look at my P&L here, you can actually see I added a relatively small size. If you look at the lot size here, it's only 8.2 lots. My first position was 24.5. So here we got 24.5 lots. Then here I got 8.2 lots. Scale in. then price still moved into my favor, and I just didn't want to hold this over the weekend because I just want to have a good sleep. That's why my initial target was actually way above at 1.79 level. But yeah, it is what it is. I'm happy to close it out. Full position at 178.64, about $24,000. And I'm happy with the position when it comes to execution, when it comes to management, scaling in. Everything was quite perfect. But in the beginning, I was nearly getting stopped out on that one. So that was sort of a luck as well. So that's pretty much it. If you look back to the chart, you can actually see 8.2 lot scale ins, then running all the way up. So not too bad of a position. So since we have a bit of time, let's talk a bit about scaling in. So when it comes to scale in, you'll see that every time when I'm looking to add more size into any particular setup, I always make sure it's less than 50% of my initial size. So why do I do that? Because some of you may be wondering, why don't you add on more size? If you add on more size, it would have been a lot more profitable. But the main thing is this: scaling ins are like extra pocket money. Just take it that way. When you're looking to scale into or adding more size into any particular position, your thesis is basically saying that I think this has potential to pull back. That's why as it pulls back, I'm expecting this to continue running back up in terms of an uptrend. That's why you say, if it pulls back, I want to add more size into it because my initial position has given me a lot of breathing room, has created a lot of buffer that allows me to add on more size into a position. If let's say my scale ins really fail and price really does pull back deeper, I still have a lot more profit to cover that minor drawdown. Get what I'm trying to say? So the main problems when it comes to scaling in, especially for a lot of beginners, is that they scale in same size. If assuming here you scale in another 24.5 lots, guess what would happen? If this entry really fail as price pulls back deep, now your average price, your average entry is somewhere around here. How do I know that? Just divide these two distance and find a midpoint. Where's the midpoint? Very likely is here, right? So the moment you do that equal size scale in, you are basically sabotaging or sacrificing your initial entry level advantage. The main reason why you're able to hold through this entire position, it was because of your beautiful entry price, right? Or what we call a price position. You're buying at the low. That's why it allows you to hold the position for such a long period of time. But if you start scaling in equal size, you're basically saying that I don't care about my initial entry. Now your entry price comes to here. Why? It's because the midpoint of these two levels, okay, right here. So if price really does pull back deep, your hard-earned profits for 15 to 18 or multiple days basically just vaporize within a few hours, or maybe within half an hour. I've experienced that before. So when it comes to scale in, remember, only scale in 50% or less. Don't go anything above 50% of your initial size, because if price really goes against you, it can turn out to be really ugly. All right, scale in are like extra pocket money. Don't be cocky, don't be greedy. Okay, so again, now I'm pretty sure all of you have seen that, but just a quick proof that, okay, that's two positions that I took. One, the first one is 24.5, about 22k. Second one is 8.2 lots for 1.9 thousand. So closing about 23,800 plus. I'll just call it 24. All right. So that's it for the trade recap on this one. If you like the video, please don't forget to like and subscribe. Let me know if you learned something new, and I'll talk to you in the next video. Bye bye.